Hi, thanks for joining me again. This week I thought we'd look at a principle called the spring. Now, a spring is a successful test of previous support level. When you see support come in and price comes back and retests that area for strength, if it's successful, it's considered the market maybe on a springboard, ready to bounce higher. In some ways, it's a confirmation that the market is prepared to back a stock and push it higher. You generally look for springs in trading stocks and trading markets, although they can form organically, and they do form organically. Generally, you're looking for trading stocks and trading markets. So you can see on this chart here, we have a stock where price has been trending lower. And you can see here that support was found, and in response price moved higher. So you'd consider that generally some support has come in here. So if we draw a line across where support was found, you can see that price has come back here and tested this level, and it's briefly dipped below, but the market has quickly recovered and closed back at the level with the next bar higher. This little push below the previous support, remembering previous support was here, this little push below the previous support is considered the spring, and it's suggesting that the market may be poised to move higher. What it is, it's showing that there's people who have positions, most likely bought here, and they're prepared to support and defend their position. And if they're in the market ready to support and defend their position, they're likely to encourage the market higher when trading conditions are favourable. So you can see here, in response, prices initially pushed higher. It's come back and briefly tested the market again, and then it's pushed higher in response. So this is your spring, or this is showing that the market is in a spring position. Now, real world example. This is the All Ords. You can see that the market has been trending lower consistently. And you can see that right here, support has likely come in, shakeout type bar on very high volume. So if we push forward a little bit and see what happened. Now, springs are generally most powerful and consistent, and they work the best when you've got strength in the background. Strength in the background in an uptrend or immediately after a breakout is another good time. But you want to find strength in the background. Now, you can see here, this is likely your strength in the background. This was buying, strong buying. You can see that the initial response was a push higher, and then the market's gone into its general mopping up supply and continuing to accumulate. That's what all of this is. Now, down here, we've got support come in on an increase in volume. You can see spread has narrowed. You'd like to see that. You don't really want to see a spring with a really wide spread. And you can see prices initially dipped below the previous support and rebounded back quickly with the next bar higher. This was a good sign that the market is defending against supply, and it's in a position to support the stock, or in this case, support the market. And you can see that the response was a good push higher. Another example, this is APT, Afterpay. You see price has been trending higher, and then you can see selling pressure came in here and here, and here and here, and that tipped price over. Then you can see here that support has come in again. This will be some form of reaccumulation after the damage caused by the profit taking previously. And although this bar here is a spring, it's got a fairly wide spread, and you don't really want springs with wide spread. It didn't pay very much, just paid to here. But this is a much better spring. Prices dipped below previous support, spread has narrowed considerably, and the next bar is up. You can see price moved up to there. It came back and tested the spring and then responded positively. Now, some traders would immediately get in and just buy this little bounce, and others would see the spring and wait to see if it was tested. About 50% of the time the spring will be tested in some way, and then buy the test of the spring. This is the market coming back and just double checking the strength is still there. You can see price came back, a little increase in volume, but then immediately bounced higher on low volume, which suggests that there's very little supply in the market and price was able to move higher very easily. Now, another way you could have traded this would be, this is where price initially came down and support came in. So when price moves back above that bar, then you could expect that, and price is in a position to move higher. So here was your breakout above that level, and here was your little test. You could have backed that test and pushed higher from there. Now, I said earlier that you want to look for springs with strength in the background, that's buying in the background, in an uptrend or after a breakout. Now, this stock is in a downtrend. This stock is AJM. You can see considerable selling pressure has come in up here, and price has started to trend lower. You can see that price has broken down more than once, and this isn't where you would be looking for a spring generally. You can see price is broken down here. Here's your breakdown bar. Price is broken down again. Tried to hold on here. Here's your breakdown bar. Now, you can see here, an attempt to support the market has been found, and it's knocked price sideways. You can see here prices dip below previous support with a narrow spread, but in a downtrend and with selling in the background, there's just not enough strength in the market, and the selling pressure is greater than the buying pressure. So all there was one bar higher, and then prices come back. It's tried to hold on with support, but eventually it's broken down again and price continues lower. This is not where to look for a spring. Although it is a spring, it's in a bad place. It's in the wrong place. It's not where you want to look for a spring. You want to look for springs with strength in the background, not weakness. That's buying in the background, not selling. You want to look for stocks that are uptrending, or you want to look immediately after a breakout, where this is immediately after a breakdown. It's in the wrong place. And although it did pay for one bar, it didn't pay very much, and you were taking on more risk than you're probably going to get as a reward. Okay, hopefully that explains springs. They can form organically in the market. That is, they can form by themselves, but they're much better in trading stocks and trading markets where there's active traders involved who are going to move the market, or at least attempt to move the market. Okay, that's all for today. Thank you. See ya.